All right, traders, it is my favorite time of the weekend, and that is to prepare to trade the best setups at the best prices. Right now, as you could see, the SPY is currently gapping down from 409.39 all the way down to 408 so far. With that being said, I am going to be giving you the key levels. Say this key level breaks down, spikes back up, reacts as a resistance. This is where you're going to want to buy puts. Say this key level breaks out, goes back down, reacts as support. This is where you're going to want to buy calls. I'm going to show you how to trade the best setups at the best prices. I'm going to be giving you the key levels, and it is your responsibility as a trader to determine if this key level is breaking out and then reacting as a floor, as a support level, which is bullish, or is this key level cracking down and then spiking back up to form a roof, reacting as a resistance, which is bearish. It is your responsibility to determine that. With that being said, let's get into identifying the key levels and the potential bull and bear traps heading into tomorrow so I can share with you this money-making information. Let's get straight into it. So in terms of the SPY, we are gapping down. When a stock gaps down, that means it's opening up lower than it previously closed. So we now have this empty space and this gap that's waiting to fill above at 409.39, which will be a key level heading into tomorrow. So our first level is going to be $409.39. Now, what do we need to understand about this level? In terms of this level, since it is gapping down, we are going to call it a bearish resistance level. It did also react as a resistance right around here, right before the market was closing as well, right? You can see it had a little breakout and they tried to turn it into a floor, but it wasn't going anywhere. And now we're gapping down. So as of now, we are going to be calling 409.39 a bull trap level where resistance is forming, which is the new best level to buy puts for a gap close reversal. So if you see a resistance level, this is resistance, right? Forming at 409.39, you're going to want to buy puts, max risk $410 on that, right? Do not hold past 410. If it's breaking above 409.39 and forming a floor like it's doing here, then it's going to go bullish and it's going to try to break out. Well, if it goes bullish and it tries to break out, where's it going to go? The daily chart. The daily chart's going to tell you exactly where it's going to go. So if they form a floor at the bearish level, then it's going to go to right here. It's going to go to 400 and around $13. And you could see there's even a gap to fill above right here at 413.98. So what I'm telling you is 409.39 is your best level for puts if it reacts bearish. If the trend flips and it reacts bullish and it starts breaking out, goes to 410, then they're going to send this to the next resistance to fill the next gap at 414. You better believe me, if SPY hits 414, this flips bullish, SPY hits 414, I'm smacking puts initially. Initial reaction, I smack puts. Initial reaction, I'm smacking puts at 409.39, 410 max pain. And then initial reaction, I'm smacking puts even heavier at 414, right? Major resistance, gap close reversal, phenomenal level, great level to be swing trading puts at 414 as well, right? Now, let's discuss our other levels. So now that you guys understand, okay, if that level reacts as a roof, we're going to be going to this 408 support. That's our next support. If that level reacts as a support level, then we're on track for 413, 414. Respect the bulls. They turned it into a floor. We're not going to hold and hope. We're not going to get trapped like people did on Friday. We're just going to respect it, right? Now you know how it works both ways, right? So with that being said, this is what I want you to understand as well. This is make or break. And listen up because this is very important. So there's a gap to fill that has now been filled at $408.30. There's a gap to fill at 408.28 right here. You could see there was a gap to fill at 407.28. Once it filled the gap here, bearish reaction, major reversal, major crash, major resistance, right? So the point being is, for this to be truly bearish, for this to flip truly bearish, what would need to happen is this. They would need to crack this under 408 and turn that into a resistance level. If that does not happen, they're going to pump it back up to fill the gap above, and then it's going to try to reverse, crash back down. If it doesn't reverse and crash back down or forms higher support, then they're going to try to break out, form the floor, send it to 414. So what I need you to understand is this. This is what you need to understand, right? This right here, this is going to be our key zone. It's a zone. Our zone is going to be 408 to 407.70. This is a zone. This is a previous resistance, but since the SPY had a breakout, it's going to try to react as support. It's going to try to react as a new floor, right? So pay attention to that, because in order for this to actually flip truly bearish, they need to crack under 408 and they need to turn this 407.70 into a resistance level. It's going to try to bounce off this level. So what you need to understand is right now, the bulls who swing traded just got trapped because they were greedy. And right now it's gapping down. It's retesting previous resistance, which is going to be towards 407.70 and 408. Right now it's trying to react to support. If it continues to react to support and it continues to hold up, they're going to spike this to fill the gap at 409.39. Once it fills the gap, it's going to try to reject and go under 409 initially. Doesn't mean it's bearish. Remember, for this to actually be bearish, it has to crack under 407.70 and 408 needs to maintain a resistance, right? So that's what you need to know. That's what you need to understand. So in terms of our key level breakdowns, if 409.40 reacts as a floor, we go to 410. Break above 410, 413, 414, that's where they send it to. Gap fill play. Gap fills at 414. We hit puts. In terms of bearish, it needs to go under 408. They need to form a roof, a ceiling at 407.70. And then from there, where do we go? We go to right here. We go to 406.62. If they crack that, then we drop off to 405.45, which was the previous pre-market highs. And then we start to fill the gap if it goes under that. So in terms of your overall levels, this is what you need to understand, right? These are overall levels. Write these down. $414, that's a gap to fill above. Amazing level for puts. 409.39, another gap fill level for puts. 408 to 406.70, that's previous resistance, going to try to react to support. If that cracks and reacts as a resistance, the trend flips bearish, and then they send it to 406.58. If it cracks under 406.58, then we go to 405.45. If it goes under 405.45, then we fill the gap at 403.70. Best level for call is 403.70. So that's your cheat sheet. So I'm giving you the cheat sheet. Look, we're going to erase all of this really quick. Going to write this out. Simple stuff, right? So 409.39, we're going to draw a line there. That's our gap fill potential put level, right? And then we have 408 to 407.60. That's going to be a zone. Previous resistance going to try to react to support. If it cracks and breaks down, reacts as a resistance, then the trend flips bearish, right? It's not technically considered bearish until it cracks and reacts as a resistance and forms a roof. Then your next level is right here at 406.70. Then your next level is right here at 405.50. Then your next level is at 403.70. And then above this, if it goes above this and forms a floor, we go to the daily level and fill the next gap on the daily at $414, right? Obviously, some of these levels are wider spread. They're going to take more time to hit, but that's the overall direction on where they're going. So what you need to understand is that is your cheat sheet, and not all levels are created equally. And obviously, we're more focused on puts at the higher levels and calls at the lower levels. Best level for calls be 403.70, right? But understand, this is how it works. If it breaks above a level and forms a floor, then it's bullish and it goes to the next level. So how can you identify that? This is how you can identify that. We went over this in Friday's video. Very, very simple. This right here, this is a pre-market roof, a pre-market resistance level. It has a breakout. It's not bullish. It could be a fake out. Once it sells back off after breaking out, if it forms higher support, if it consolidates, forms higher support, or if it consolidates at previous resistance, like it did, bullish bottom wicks at previous resistance, no longer resistance, now support, now floor, then it's bullish. So understand, a floor cannot be determined until the stock breaks above the level, right? Breaks above the level, then pulls back and reacts as a floor, as a support level. Then it is confirmed. It is not confirmed when it breaks out. So I just miss out on the breakouts. I don't care. I don't care if it keeps on going up. I wait for it to retest, because then you can determine if it's actually a bullish floor and not a fake out, right? No luck. And then same with resistance. So at resistance is not determined until the level drops below and reacts as a roof. So what would that look like? Well, this right here, this is the floor, right? So if SPY goes under the floor, if it cracks under the floor, and then you wait for it to pop back up. If it forms lower highs, or if it turns the previous floor into a roof, rejects, then it is resistance. So what you need to understand about every single level that I've given you is, if it reacts as a floor, it goes to the next level. If it reacts as a resistance, it drops to the next level. And all of these red lines are your levels. And you could see some of these red lines are smaller channels. Some of these red lines are wider channels, very lucrative, right? That's the best advantage of getting the best entries. You get the high risk reward ratio. So that's how this game works. So there is no talking shit. There is no predicting. This is simple. Is it a floor or is it a resistance level? That is what you are trying to determine. In hindsight, what we do know is we know our key levels for puts, the higher ones, and we know our key levels for calls, and we know what to respect. If this breaks above 409.39 and forms a floor, I respect the bulls and I don't buy puts. And if I'm in puts, I cut my loss because the daily chart says the next resistance level is not going to get there right away, but eventually it's going to try to. And I'm going to respect that because I don't hold my losers. I get out and I respect floors when I'm in. I respect floors and I respect ceilings and roofs. And it is your job to identify the bull and bear traps. And it's your job to write out your key levels and see where it can potentially go. And this says, well, if this turns into a floor, our next resistance level is right here at 413. And there's a gap to fill at 414, which would be your new best level for puts, right? So those are my levels. And it is our job and our responsibility to trade at the best levels, the lower and the higher ones, to understand the potential of these levels, right? These zones. Some zones have wider levels. Look at how wide this zone is because it's at the lower level. Look at how wide this zone is because it's at the higher level, top and low channels. Look at how shittier and smaller these zones are because they're in the middle. They're not as ideal. They're not as lucrative. They're not as good, right? So it is your job to identify all of this in advance. And what you are looking for is you're either looking for a crack below a level, and then when it cracks, it needs to pop back up, react as a resistance to be confirmed bearish, or you're looking for a break above a level, and then it needs to pull back down and react as a floor, right? So if it just cracks and keeps on going down, you don't do anything. If it just breaks out and keeps on going up, you don't do anything. You wait for the retest, and you wait for a floor or a ceiling to be confirmed. That is how you use these videos. That is how you use these key levels. Now let's make some money, man. So that's our key levels. That's what you need to understand. This is the elevator. This is the game. Super simple stuff. And I've identified these key levels and they're near perfect. So with that being said, tomorrow I will be targeting 409.39. That is my true best level to be targeting for tomorrow. I will also be paying close attention to 407.60 to 406.70 and then 403.70 gap fill level. That's another level that I'll be targeting. Well, another thing you must understand is this. SPY may be overbought, but it is not ideal, even if it's overbought at resistance, to buy put options when it gaps down. It's not ideal to do that. You have to wait for the gap to fill. My members within Trader Society, we ended up swing trading puts. I waited until the close. I didn't get the best entry. I bought the puts when it was at 408.40. I got squeezed a little bit into the last 5 minutes. I bought it at like 3:50 p.m. Right now, I'm up on those puts, right? I'm going to be looking to likely just sell the open since it gapped down. We'll see, but that's what I always do. When it gaps down, I just sell the open and then I wait for the gap to fill. Then I hit puts again. In the meantime, I will usually look for an opportunity to buy the dip on calls, but you got to be extremely cautious with doing that because it's so overbought. You got to be extremely cautious with buying the dip, but you got to be extremely cautious with puts as well because the gap hasn't filled from 409.39 yet, right? So for puts, best thing you do is wait till 409.39. If you're going to do any lotto calls, keep an eye on 406.70. Keep an eye on the pre-market lows for a squeeze for the bears with a tight stop. So another idea for a lotto trade is pre-market lows, buy calls, tight stop, right? That's just a lotto in a sense. A great idea is to wait for it to go back to 409.39 for the puts in the gap close reversal. That's my overall thoughts. That's my overall trades. The only new key levels that will be added into tomorrow are the pre-market highs. You need to focus on that as well. And the pre-market lows, you need to focus on that as well. And just understand, they are going to, don't get trapped. Don't get trapped. They're going to try to attempt to fill the gap. And then it will try to crash again after it fills the gap, right? So for puts, it's best to wait till 409.39. Keep an eye on pre-market highs. For calls, if you're going to do a lotto trade, look at the pre-market lows and look at our other key levels that we drew out. That is how you trade the best setups at the best prices. If you want to be a part of Traders Society, this is a one-time fee. It's lifetime access. We're going to be raising the price very, very soon. And if you want to join, now is the best time to join. All the information is explained in the first link down below in the description, and you get access to the video lesson library, the course, the trading system. You will learn how to master and trade the price action of SPY and other stocks. You get access to the moderators within the network, within the chat room. You get access to me, live trading commentary, live trading voice, the live voice streams, the entire Discord server. Everything is within Trader Society. If you want to surround yourself with the right information, the right network, the right community, the right levels, my real-time commentary on SPY, my real-time trades, it is all in there, man. We ended up swing trading puts at 408.40, and it looks like we're going to sell to open and bank on those puts, right? So with that being said, I'm going to be signing off. We're going to absolutely crush it tomorrow, team.